Foreclosures in some Canadian real estate markets are up as much as 400% since January of last year. And listings are also on the rise as well, while sales are down, meaning that depending on which way you look at it, there's either massive buying opportunities or a lot of pain potentially to come. And a lot of this has to do with interest rates and the unreasonable amount of money that people are paying for home ownership in Canada right now. But before I get on the details and discuss what's going on in Vancouver, Calgary, Edmonton, and Toronto, my name's Nolan Matthias, and if you want the latest Canadian financial and real estate news, this is the place for you. So do me a favor, hit that subscribe button and hit that like button so more people like you can see this video. And don't forget, you can still get my book, Mortgage Secrets, totally for free by going to mortgagesecrets.ca. All you have to do is pay the shipping and handling. So let's get into it. Let's discuss what's going on in the Canadian real estate market because it's a doozy right now. There are some areas of the country that are seeing significantly higher rates of foreclosure. Obviously, the cost of living is massive. And depending on where you are in the country, the market is completely different. There are markets with significant opportunity. There are markets that are falling and falling fast. And there are also markets that previously were doing quite well, but are now losing a little bit of traction relative to neighbors nearby, which I'll talk about in a second. So I'm going to jump in here and show you the stats. As always, these are courtesy of Edge Analytics, who puts together one of the best stats packages, in my opinion, in the industry. And all of this data is from them. There's so much more in those stats packages than what I show you here. So if you are in the real estate industry or you are looking to buy in the near future and you like the stats and you like the data, make sure you check those guys out. So let's start with Vancouver. Vancouver monthly home sales. As you can see, they're coming down to more normal levels. Obviously, there were spikes in 2015, spikes in 2021, 2022. But for the most part, the number of homes being sold is very much average right now, so to speak, relative to other times in history. Now, as you can see right now, there's a lot of up months, there's a lot of down months, and it's kind of jumping back and forth depending on what's going on. It seems like when there's a rate reduction, it seems to help a little bit. And it seems clear that we're going to see more rate reductions in the future, especially as we see inflation come down to 1.6%, which, by the way, if you don't include the housing numbers, pretty much means that we are in a deflationary period. So everything else is pretty much staying the same with respect to values, and the housing costs are what is keeping inflation high. Now, if we take a look at what's going on with respect to sales, we've seen the sales fall from a year-over-year perspective. We're seeing more falls in the condo sales than we are in single-family homes, but for the most part, home sales in Vancouver are down just about 4% compared to last year. Now, this is where it gets really interesting because when we look at single-family home sales, and this is a chart that goes back 10 years to 2014, what you can see is both in single-family home sales and in condo sales. The number of sales is pretty similar to what it was in 2022, pretty similar to what it was in 2018, and it is amongst the lowest number of sales that we've seen in the Vancouver market in a decade. You can see the black line here, which is near the bottom of the trend for pretty much all of the years. The one big exception here being in, what year was this? 2020, right around COVID. But for the most part, sales are in the low range of what they've been for the last decade, which is very interesting. Now, when you look at Vancouver's monthly new listings, what we're starting to see is the new listings come up quite substantially, almost to the level they were in 2020 and 2021 and 2022, not quite there yet, but more houses are coming to the market. In fact, if we look at it from a year-over-year perspective, it's somewhere in the neighborhood of 12 to 13% more than what we previously saw. Now, when we take a look at the sales to new listing ratio, and this is the one that really matters for home buyers, what you can see is that the sales to new listing ratio is down around 40%. What this means is that the market is very much shifting towards a buyer's market, which means there's more properties for sale, less buyers, and as a result, buyers actually have more negotiating power. And when they have more negotiating power, what that means is that there are better deals to be had as sellers try to offload properties that they're having trouble selling. And as you can see right here, the months of inventory available is up around 8 months. Now, typically a buyer's seller's market, the break-even point for that is around 3 to 4 months, depending on which market you're in. And what you can see is that this is very much in buyer market territory. In fact, as far as the months of inventory goes, we are at the third highest level we've seen since 2010. So if you're looking at buying in Vancouver, the market is very much in your favor right now. And that's affecting home prices, but not in the way that you would expect. We're seeing home prices remain fairly flat right now. And the question is, will this turn? Will houses get cheaper? Well, as interest rates come down, the likely answer to that is no. We'll probably see them remain flat, but keep in mind that I don't like to make predictions here. This isn't a channel where I pretend to have a crystal ball. Anything could happen in the economy, and depending on how bad things get, we could see these prices come down. Now, the one big thing to watch is unemployment levels. If unemployment starts to spike, that could lead us to a scenario where we do start to see home prices come down. But as long as employment stays stable, interest rates are going down, and there's a little bit more inventory, those headwinds and tailwinds should balance each other out. Now, with respect to the monthly change in the MLS HPI, or the Housing Price Index, what we're seeing right now is that that is actually on its way down for the first time in 6 or 7 months. Now, we'll move into Calgary and Edmonton here, and I love that Edge Analytics puts these two cities together because quite often they move in unison, but we're seeing some divergence right now. So right now, as you can see, the sales numbers in Edmonton are quite high. Very affordable city, lots of net interprovincial migration to Alberta, and people are tending to choose Edmonton over Calgary right now, so it seems probably because of the lower cost of living. Now, you give up a little bit from an income perspective, but you can tend to buy a home in Edmonton for fairly cheap. And when we take a look at the year over year change in sales, well, Calgary was kind of a booming market for the last little while, but right now, compared to last year, sales are down quite substantially, while in Edmonton, the sales are actually up quite substantially. So we're seeing a divergence of these two markets, and what that probably means is that the average price in Edmonton is probably going to start to catch the average price in Calgary, which makes a lot of sense. Now, Calgary monthly new listings, you can see these numbers are coming up, and they're coming up in excess of what's happening in Edmonton. Now, I'm not sure what's happening here in the Edmonton condo market. There's a lot more listings in the condo market than there is in the detached or the single family home sector. But what you can see is that the listings are coming to market in Calgary, not as many in Edmonton. Now, when we get into the sales to new listing ratio, as you can see here, Calgary's sales to new listing ratio is still very much in a balanced market. And I'll tell you what, Edmonton's is leaning towards more of a seller's market right now, where we may start to see some bidding wars, we may start to see some more activity, and we may start to see higher prices as a result. Now, as we're looking at the share of Calgary homes purchased and flipped within 6 months, this number to me is a little bit disturbing. We're starting to see the number up around 7 or 8%. Now, what this tells me is that there's likely people from other provinces coming in and flipping homes in Calgary, which, by the way, is probably a mistake. If you are paying attention to what's going on in the oil industry right now, Saudi Arabia is threatening to unleash production because OPEC is refusing to limit the number of barrels per day that are being produced. And this could have significant repercussions on the Alberta economy. So if you're buying right now thinking that you're going to flip over the next 6 months, keep in mind that Calgary is very much, and Edmonton is very much, a resource-based province. And if Saudi Arabia does follow through on its threats, that could very much affect the Alberta economy and could leave you holding the bag when it comes to that flip that you thought for sure was going to be profitable. So keep that in mind. And with respect to population growth across the country here, what we're seeing is, yes, the most net interprovincial migration is definitely in Alberta. And what we're seeing as well is that the percentage of people leaving Ontario is quite high relative to the rest of the country. Guess where they're probably going? Most of them are probably going to Alberta. Now, as we look at the active MLS listings, you can see that the number of listings is coming up more into normal levels, at least from the last 10 years perspective. And same thing in Edmonton here, you can see that the new listings are actually quite low, which puts upward pressure on pricing. Now, the year over year change in MLS HPI, or home price index, is in Calgary, you've seen it come up just under 5%. In Edmonton, you've seen it come up just under 8%. Now, the Calgary condo market is doing exceptionally well relative to Edmonton's, and Edmonton's single family market is doing exceptionally well relative to Calgary's. So basically what we're seeing here, and like I said previously, is we're seeing this divergence in the market, and what that is leading to is the prices in Edmonton and Calgary becoming more balanced and more in line with where they've been historically. Because as you can see, if you go back in history here, typically Calgary and Edmonton run in a pretty similar price bracket. Now, let's get into Toronto, because this is where things get scary. So let's start with Toronto new home sales versus condo starts. New condo sales are the lowest that we've seen since 2008. And the condo starts, which is an 18-month lagging indicator, well, these are starting to come down quite significantly as well. This tells us there's big trouble in the Toronto condo sector. And more importantly, when you look at overall in Canada, the household debt service ratios, when you look at them compared to the US, we're seeing this number spike quite high. This has everything to do with the variable and adjustable interest rates and the 5-year fix, which is essentially a 5-year adjustable rate, which sees interest rates in Canada on mortgages fluctuate more frequently than the 15 and 30-year mortgages that you see in the US. So as a result, the debt servicing ratios in Canada are significantly higher, which means more money is going towards housing, which means it's becoming less and less affordable to live in Canada. Now, with respect to the actual Toronto monthly home sales, we've seen this number come back down to the lowest it's been since 2010, if you ignore the first few months of the pandemic. We're seeing condo sales come down quite substantially. The year over year change, now keep in mind that this goes back to a year previously. This isn't the month over month change. These numbers are up, but they are definitely declining. And you can see that when you look at the single family home sales and the condo sales, and you look at the black line, which is 2024, and you look at it relative to the historical numbers going back 10 years. These sales numbers are low, and they're going lower and lower and lower. The question is, how low will they go? And more importantly, will lower interest rates, actually help them come back up? And then when you take a look at active MLS listings, this is where it gets really scary, because this is by far the highest they have been since 2014. This tells us that there's way more inventory, there's way less sales, which is what will lead and typically leads to a correction if the Bank of Canada can't do something, lower interest rates, and make housing more accessible in Ontario. Now, the year-over-year change in active listings in Toronto, depending on where you're at, you can see 905 condos are quite high. Same thing pretty much across the board. There are so many more listings right now. Like, look at it back at the beginning of the year to where it is now. There's so much coming to market. A lot of this is condos, but as you can see, there's also a significant increase in the number of single-family homes and detached homes, and that is problematic for the entire city and the entire province as a whole. Now, the sales to new listing ratio is down quite substantially, similar numbers to what Vancouver is looking like. Again, it's a buyer's market. You've got opportunities if you're going to buy a home. If you buy now and you hold onto a property for 10, 15, 20 years, there's really great buying opportunities and really great opportunities to get a deal on a property. The Toronto single family MOI, so months of inventory, again, similar to Vancouver, you're seeing these numbers come up quite substantially. It's only 4.5 in single family, which would indicate a balanced market. But when you look at the condo numbers, 7 months of inventory, it's going to be a long time before these sell through. And the only way that they sell through is either more demand is created somehow, or people start lowering their prices. Now, with respect to the home price index in Toronto, you can see that this is starting to fall. We had a month here in September where this is starting to fall. My guess is that this will continue to come down over time. And if you take a look at the annual change in Toronto condo prices, my expectation, given how much inventory there is and how much new housing there is coming to market, how many new condos there are coming to market, is that this number is going to get lower and lower and lower, which means you're probably going to see some changes in the condo prices. And if you're holding a property right now, expect that it's going to go down in value. And this is where it gets really interesting in my mind. Average monthly rent is pretty much come down from the highs in July of 2023. People are trying to rent their properties out. Obviously, you see that interprovincial migration, people leaving Ontario, that puts downward pressure on rents. But this is going to get pretty serious here pretty soon as these condos come online. There is going to be some ability to rent property in Toronto for significantly cheaper than you can right now. And what we're starting to see is we're starting to see those Toronto condo investments, those Toronto housing investments come back closer to the cash flow levels. And what this means basically is that there will be a point in the near future where it actually makes more sense to own a property than it does to rent. Because right now, with prices so high and not coming down yet, it probably makes sense to rent because you can probably rent for cheaper than you can buy. But with this number coming back up, and as housing prices come down, this number is going to come up and up and up and up. Well, there's a really good chance that we're going to see it make a lot more sense to start owning again in Toronto rather than buying. And this is the real number that scares me on the condo side, because you look at all the number of listings, the reduced number of sales, look at how much inventory is set to come out of the market next year. This is probably where we're really going to see the big issues. This is in 2025 in the condo market. And my guess is going into 2026, we're probably going to see some really, really great deals on condos in the Toronto area. But as I mentioned at the beginning of the video, in some markets, foreclosures are up as much as 400% compared to January of last year. And this is what's really scary. The Toronto power of sale listings is up to almost 250. Now, this isn't a massive number in the grand scheme of things, but the trend on this is what's really, really scary. And if we're paying attention here and we pay attention to the trends, well, it becomes really clear that if this number continues to go up, if we see some sort of spike in unemployment, things could get bad for that market very, very quickly. So if you are looking in the Toronto area, the question is, do you bide your time or do you buy now? The answer is, I have no idea. But if you are in a position where it is time to buy, you can definitely get a deal. If you can wait a few months, you're probably going to get an even better deal. But only time will tell how bad this gets. And if you're looking in other markets like Vancouver, you're looking in Calgary, you're looking in Edmonton, we're very much returning to balanced markets, which means there is buying opportunity, an opportunity to own a home, own it for the long term, get a deal, and be really, really happy with both the interest rate that you're going to get in the next couple months, as well as the price that you're going to pay. So if you want to know more about what's going on with interest rates, and by the way, there's a really great strategy around taking a variable right now in order to get a lower interest rate while rates come down so that you can lock into a fix later, make sure you check out this video right here.